Monthly. By the way, Charles, I have my own opinion on gold, which may or may not be correct, but I'll share that with you. And we'll see how it goes. Let me see where you're coming from first. What's the time? We're 26, so we're about 30 minutes or so. So gold has been used as a hedge against fiat currencies, absolutely yes. What we also refer to as inflation hedge. Although price has doubled a few times in the last 10 years to the current price around 1725, yes, the uptrend will remain intact as long as uncertainties in the market, such as euro crisis, is not fully resolved. I would completely agree with you. Okay. Time plan is one name. Okay. Plan to trade this pair long. You want to go long on this, okay? Number of lots 3, entry price 1630. So the first thing I would do is I would take a line and I would draw it right there. So we understand where Charles is looking to get in. And so what I'll do is I'll put it I'll put it green. So mentally understand he's looking to go long. If I do red, he's looking to push short. That didn't come out right. If I do it like that, will that be better? Yeah, probably better. So 1630 is where he's looking to go long. Stop loss is 1610. Okay, 20 points below. First take profit, okay, 1650, 18, 2000. Okay, alright. No worries, risk reward not finished, no worries. We'll go there. Charles, one thing I will tell you, I don't trade gold or silver for like the way I trade forex, okay? But I am considering that for my personal retirement funds. So I'll be talking more from that perspective. But I don't trade regularly gold and silver like I trade the currencies. Just a heads up. But I'll be happy to share my thoughts on the chart and whatnot. So chart trading, gold has made 26% retracements and sitting all down. So let's put that. There's a monthly chart, 25. Should be down here. Yep. So right there, one of these is 25. Oh, that's 21. What I'm seeing right now is 253. Yep, right. 25, 251, 95. You got it at 70. That's fine. You're looking at probably a bit an ass difference. And there's 1920.80. You got it at 1920.72. I'll go with your numbers, Charles. So for the benefit of those again who haven't used, okay. So for those of you who haven't used Fibonacci's, I have to emphasize again, please do so. It's very simple. It's not rocket science. All you need to know is what is the low and what is the high. I'll go down here. That's it. Drag it up there. This box opens up, and it's a little different for different platforms you use, but more or less it's the same in terms of how to do it. So the rate is 251.70. Right there is 251.70. High is 1920.72. So I'll go with 120.72. As I said earlier, if it's going long, I like to keep the trend line. So this is the trend line. You see that? It shows you where you started and kind of where it's going. So I like to keep the trend line intact. I change the color to green, so visually I can understand. And since it's a monthly one, so I'll put it like a little bold. Make sure my percentages are selected. Now, if you're doing it for the first time, and you don't have like 76.4 in there or 23.6 in there or whatever you want in there, you can simply go add, click add and add that, and it'll be good. And then set it as default and you'll be good to go. Okay, so there is that. The 50% is the pivot is looking at 108.6. Okay, alright. I really hope it comes down till there. Okay, support resistance levels, December low at 1522. December low at 1522. December low at 1522. Beautiful, Charles. I like it. I like it because 1522. 1522.52. I'm just using Charles. Oops, I should have put that a little bit bold. Okay, so this I'll try using blue now, and since it's the monthly again, I'll put a little thick. So guys, do you see how beautiful this is? How beautiful it's turning out to be, Charles? 1522 is right there, this candle low. is December of 1522. 1522 is also, now understand, this is a monthly chart. It's not a 1 minute chart. It's not a 5 minute chart. It's not an hourly chart. It's a monthly chart. The low that Charles is picking up, 251, is all the way from 1999, right, to current. 23.6%, which is, if it starts breaking 23, typically, you start saying, okay, let's see where it goes. 38.2 is a kind of a firm retracement. As it starts going below 38.2, you can expect a reversal and so on and so forth. But if it's going with the trend, now when I say with the trend of the monthly chart, if it's going with the trend of a monthly chart, typically if it does 23.6%, you can assume that the trend is still intact. That's a normal retracement that would take place. But 23.6 is on a monthly chart is 526.8. December low is 522. So that's not bad. Okay, let's keep going. November high is 1802, and that's probably this one, 1802 right there. So I'll put that 1802. This since is only trade plans, so I can take all the time to draw the lines out. But if we start getting 2 or 3 trade plans, I'll be very quick, just so you know. So if I don't take so much time at that point, you should know why. I'll put that in a little lighter font. Okay, so that's the range is looking at so far from what I can see. Okay, the average monthly pips range is 156 based on 14 ATR. Okay, I guess. Weekly chart. Let's go on the weekly chart. Now, the beauty here is as soon as I open up, see I've drawn the lines. As soon as I go on the weekly, of course, lines will stay, and you start seeing this range a lot better. Isn't that beautiful? See, you saw this on a monthly chart, and for those of you who don't understand multiple time frames, that's all this is. It's the best way I can explain this. It's a magnifying glass. You're just taking the magnifying glass closer to the small fonts in a book in front of you. So as you step back, you almost can't read the font, but you can see some kind of a design. But if you take a magnifying glass and start going closer, you can start reading the fonts clearly. So when it comes to charts, when you're on a monthly chart like this, right? When you're on a monthly chart like this, you can see the overall trend. Unless you're an experienced chart reader, you can quickly figure out what this would look on a daily or a monthly chart or a weekly chart. I'm sorry. But if you're not experienced, and you don't really need to be, you need to know how to use your tools properly. That's the key, and you keep becoming experienced. As you open up your weekly and your daily, this will start becoming a lot clearer. Let me pause and again explain this. At this point in time where I am, right, there are a couple of things you need to know, and I don't care if this is gold or this is silver or whatever this chart is, right? All you need to know is on a monthly what it's doing. So beautiful, it's a superb bullish trend. Okay, great. In February 1st, 2012, do I really need to know what happened down here in 2008 initially? Later I'll explain to you, you need to actually, but at this point, and so I need to go down on a daily chart or an hourly chart in 2008 and figure out, no, the answer is no. Down here, no. Down here, no. So when it comes to multiple time frames, I need to know what's happening in the current time frame. So you start condensing the time shorter from monthly, so you're going to weekly, daily, hourly. So what it really starts boiling down is what's happening in the current time frame. And again, the word current time frame is perspective. I could have probably said this better. So it's perspective. So from the perspective of a monthly time frame, I'm looking at monthly, my next immediate perspective of current time frame is weekly. Think about this. And this is being recorded, so you can always go back and check it. So my next immediate perspective of current time frame from a monthly perspective is weekly. So I'm trying to figure, okay, so what's happening on a weekly? Now I can see on a weekly, it almost double bottomed. I can see my 23.6% fib and that support lining up very nicely. I can see lower tops.